Hey traders, Sunday, February 16th. It's about 1 p.m. Pacific time. Markets closed for tomorrow pretty much. They might open tonight or today at 3 p.m. Pacific time, 6 p.m. Standard time, but I'm just, unless something crazy happens, I don't think much is going to happen until Tuesday. Not a lot on the schedule this week. It looks like, again, the new thing is President might speak. It's tentative. It's a red item now on all the high impact calendars. But then there's Wednesday 11 FOMC minutes, Thursday 5:30 unemployment claims, and then Friday 6:45 is flash. And those are all Pacific Standard Times, so you need to do the math in whatever time zone you're in. So, yep, as I mentioned before, we broke out of the 6098 range, and we're in breakout now. So that range was 6021 to 6098. So to make the math work easy, it's about 80 points, which means that if we should be going to 6180-ish area, which is right up to all-time highs again. So that's going to happen. And we're forming a bull flag on the 60-minute chart. So we're really just trading this tight range right now between 60.98 and the 61.48. So look for a rinse. Again, I've said this before, the 61.13 area, it's probably going to end up being like 61.14.25 will be the low wick, and it corresponds also with the 61.8%, this green line over here, going back to February 13th. Ascending triangle, uptrend line, and these patterns just keep repeating themselves for the last month with the rinses and then ascending triangles into bull pennants. Just keeps happening over and over and over again. So look for a wick down to the 61 12, 13, 14 area, and then eventually this week going all the way up to 61.80 to all-time highs, and for the breakout to just keep going. That's what the technicals are saying. Again, as I mentioned in the last video, if for some reason we break below this 60.98 and we just can't get any higher and it starts kind of just trickling down, then you're like, okay, well, we need to, the dips won't necessarily react like they do when there's a sense of urgency and an expectation that we're going to be just pushing higher. Then you're going to have to maybe wait until they wick all the way down on more of a major daily time frame, and we'll revisit that as it happens, or as we start, if we see that action. But for now, we're just seeing long by the dip. So levels for Tuesday, and this is where get out your pen and paper, or just for me, I use a whiteboard. It's just easier. I have these layouts on it, and then I can just write them out because they change. I'll do prep the night before, but they'll change like literally in the morning. I'll wake up and go, oh, that's totally not happening anymore. So need to reevaluate pretty quickly. But the levels that we're looking at for early part of next week will be this 61.10, 61.14 area as a bounce. It already wicked down below the 50%, and then you have this corresponding downtrend line. So, if it just keeps going to down here, then it's a high probability, especially if it's like in the morning, or the 15-minute RSI is oversold in combination with it. High probability you'll get a bounce out of that, and I'll be looking for 7 to 10 points out of it. So that's what I'm aiming at right now. I've made a couple adjustments to the channel analytics. Please like and subscribe. I notice I'm getting more and more subscribers, which is great, but smash that like button. I don't know how to put the smash button on here yet, but please click the like button if it's helping you, and take care, treat them well.